Welcome to Tuttle Talk on 1190 AM. Now, live in studio, your host, local real estate expert, Andy Tuttle.
Good morning and welcome to Tuttle Talk on the Real Estate Radio Network, where we teach you what the rich and the banks do, not what they tell you to do, and where we dispel the misconceptions of financial wellness and the local real estate market and show you how following some key principles really can free you up to focus on the other important areas of your life, like your friends, your family, and the community. It's the most important hour of radio every Saturday right here on Clear Channel 1190 AM KFXR in the great state of Texas. I am your host, Andy Tuttle. Thank you so much for joining me. Remember, you can reach me on my off-air number, 214-736-9696, 214-736-9696 to talk to us about anything related to the show, any of your real estate concerns, financial fitness concerns. We're going to have a great host or a guest on the show today talking about credit. So any of those type of questions that you end up having, we want to be a resource to you. I want to be a resource to you. That's the reason I do this show, is to show you the opportunities to win in every market, and we want to do that today as well. You can also email me questions at andytuttle.com. And don't forget, you can become a fan of the show, having a lot of great content on there, a lot of great conversations going on about financial wellness and what's going on in our market. You can get into that conversation at facebook.com/Tuttle Talk. Okay, the credit guy today, he is no slouch. He's actually a very tall guy. That's what I mean. Good posture, I've noticed. Justin Nichols from the Nichols law firm, PLLC, is here. He is a credit expert, and he is going to be actually an expert contributor on our show from here forward in our Ask Mr. Credit segment. So today we're going to get into a little of where he has come from, and then we're going to demystify credit for you and go over the 5 C's of credit, the 5 major components of credit, and how you can take advantage of these different factors and how they affect your credit to improve that credit score so that you can increase your borrowing power and get better terms on anything that you need credit on. Credit cards, car loans, obviously any kind of lines of credit, your mortgage, all of that, and that can save you so many thousands of dollars. So you want to stay tuned. We're going to have a lot of great information for you today. And we're also going to get into one of the dumbest things I've ever heard come out of a Republican's mouth. It's absolutely ridiculous. Remember, I represent the common sense party here on this show, not the Democrats or the Republicans. If you do something stupid, I'm going to call you out. And that's just the way it is. So we're going to talk about that today because it's embarrassing, and it should be embarrassing to him. But first, we're going to get on the Word on Wealth segment with my good friend, John Allen, owner of Texas Community Insurance. Great company. Man, John, just so appreciate all the great work you do for our clients. We get so many compliments, how you educate them. Well, first of all, how you did it for me. You saved me a lot of money, my wife a lot of money, but I'm very high maintenance, and you were very good at being patient with me, and we get a lot of feedback from our clients. So, John, welcome back to the show.
Thank you, sir. And you, by the way, are very low maintenance compared to a lot of the people I get to deal with.
Well,
so thank you.
I like how you at least said get to deal with, so that's nice.
Get to, yes.
Yes, that's good. No, it's true. And everybody has a lot of questions. That's one of the reasons we're here, to try to educate. So, yep. Mr. Allen.
So today's tidbit of wisdom is on why insurance companies don't pay claims.
When because they don't want to pay money. Because they want to make more money.
Well, that's part of it. But actually, that's I'm going to tell you why. The reason is because you need to think of insurance as a wager, because in essence, that's really what it is. It's a bet. You are betting your premium that you're not going to have a car wreck, or that somebody's not going to break in your house, it's not going to burn down, whatever. Okay? You're betting that that's not going to happen. And in exchange for that, if you lose the bet, the insurance company then has to pay you in terms of claims. So the reason you want to make sure you've got the right kind of policy is you want to make sure that what you're betting is indeed covered, right? So imagine Super Bowl Sunday. You go to the little Ouija board there, and you pick however many number of squares. If you don't put your money on the squares, you're not going to get paid out. This insurance is the same way in terms of endorsements. Endorsements are things that might or might not be covered in the policy. So maybe water's covered, maybe it's not. Maybe your jewelry's covered, maybe it's not. You don't have to be an expert to understand whether or not it's covered. You just have to have the conversation, understand that there's certain questions you should be asking. There's certain things that your agent should be telling you, and if they're not, there's a good chance that that bet's not covered. And you want to do that so that you're not surprised in the event that when you have a claim, something happens. Why didn't I get paid? Did you make the bet? Yes or no?
Yeah, I think you just added a new sports betting column in Vegas.
Yes.
Because that's what they're going to start doing, betting on insurance. I mean, heck, they bet on how many times, the first lady was going to, flip her hair at the Oscars. I mean, they just do the most ridiculous things, so I can't imagine why they wouldn't do that. So really, in essence, what you're saying, too, is that you are that when we're putting our premiums down, we're putting our money on those slots. And really, actually, if we do have a disaster, we're winning the bet because we're covered. If we're properly covered, we lose the bet in my mind, and correct me if I'm wrong here, if basically nothing ever happens. You never want that to happen anyway, but if you go your whole life and never have an issue, you really just actually, you didn't need it.
Consider it a donation. But think about it intuitively. The less you pay for a premium, why would the company go out of its way to pay all these claims if you're paying such cheap premiums? Usually the reason is that the premium is so cheap is because certain things are left out. So the cheaper the premium, the more you ought to be asking the questions to make sure indeed you're covered.
So, yeah, and I guess that's true. You got to know what questions to ask. I think that's what my problem is, and a lot of people's problem is not knowing what questions to ask because you don't know what you don't know. How do you get over that?
That's right. Well, you've got to have a good sense about who it is you're dealing with. And we put out a document that tells people things that you should be asking. If you'd like a copy of that, just let the show know, tell us, and we're happy to send that out to you. But things that you should be asking, whether you use our agency or anybody else, these are things you ought to be talking about when you're signing up.
Oh, that's a great thing. Actually, I would love for you to do that. If you would send that to me, and if you want to get a hold of that, of course, you can email me, questions@andytuttle.com, and you can also just put a comment on the Facebook page, or you can call us. We would love to get that to you because I think that's a great bit of information. It's educational information that will help you, and I think that's a great thing to do. So I appreciate you doing that, John. I don't know why you didn't offer that sooner.
Well, it's been a secret. You have to play the game long enough to get to the key. That's
why. I see. Okay, all right, slacker. So no, thanks for that. You are listening to Tuttle Talk here on the Real Estate Radio Network. I got to get into this. It's just something. Sometimes I just get frustrated. So you'll have to deal with me. And again, a part of the common sense party here. Now, I just Rush Limbaugh said something this week. You know, he actually said for the first time something I just thought it was absolutely ridiculous. So we're going to play that clip.
Ladies and gentlemen, for the first time in my life, I am ashamed of my country. To be watching all of this, to be treated, to have my intelligence, all of us, to have our common sense and intelligence insulted the way it's being it just makes me ashamed.
I mean, did you get that? That's a ridiculous. I just don't even understand that statement. You know what? You're ashamed of the country. Well, I think I'm ashamed of you. Why would you say that? And here's the deal. And I get what Rush is doing. And in fact, many of the things Rush says are true. He has some really great points. But it's not always about what you say, is it? It's about how you communicate that. And I feel like sometimes instead of trying to have problem-solving solutions, you're more interested in riling the base. Some of those extreme things you say, for example, the Sandra Fluke deal several months ago, right? When he called her a slut. There's no reason to do that. Why would you say that? I get that you don't want and you don't agree with, and I don't agree with either necessarily, the contraception situation. Like, hey, man, government pay me for contraception. It's a life choice. Either budget it or don't have sex. I mean, that's the deal. That's what money, whether it's housing or whether it's food or whatever it is, you got to have a budget. And you got to do that. I don't agree with that. It doesn't matter if you agree with that or not. That's not the point. The point is, don't use offensive language, especially at the end of a race. If you represent the Republican Party and you're the voice of that party, why would you rile up? And now you just changed the conversation. It went from the economy to social issues. You did not help your base. That's what I'm talking about. It's about strategy. And that was a horrible strategy. And if you have to come and apologize for that all the time, you're not helping. So I see so many people get so upset at the media, right? Because it's Democratic media, et cetera. And full disclosure, I voted for Mitt Romney. I thought he was the choice to help fix our economy. And I thought it was going to be the best choice for us. But look, the Republicans have enough media outlets. Fox is one of the biggest. They don't have Hollywood, but so what? You can get your message out there. And to rile up the base, guess what? Newsflash, they're going to vote anyway. It's not like you're gaining anybody to do that. So are you more interested in agreeing with someone that has some good points that is just riling up the party, or are you more interested in solving our country's economic problems? Because that's what I'm interested in, and that's what you should be interested in. And doing stuff like that and changing the conversation to increase your listenership and your money is not helping the country. And again, I'm not saying that some of the stuff that Rush says is not right, because a lot of times it is, but it's the way you say it. So I'm more interested in taking a solution approach, trying to be bipartisanship and working together. Those things are asinine. They do no good to help our polarized nation right now. I'm just sick of the political rhetoric and crud that's being spewed out there. And I'm getting tired of it. I hope you're getting tired of it. On this show, we're going to do our best to cut through that junk and help you get a different perspective. So I had to mention that today because frankly, it just really upset me. And I don't think we need to be doing those kind of things that are taking away from our ability to be and stay at the top of the global economy, right? Things that take away from that, we just got to be getting rid of. It's dead weight. And that's what I think Rush is becoming. And it's not something that helps the party. If you're a Republican, it just helps the base, and that's not what we need to do because there's an identity crisis going on in the Republican Party that we don't have a time to get into right now. But it's something you got to be aware of, and I want you to know about that. So, Rush, I know you don't listen to the show, and you don't care because you have millions of listeners. But seriously, guys, if you listen to that, you got to cut through the crud. It's about gaining listenership, and it's about rallying the party, and it's not helping the country. You're listening to Tuttle Talk. My special guest today, Justin Nichols. This stuff does matter to you. This stuff is important to you. This is about your credit situation, and we are going to help you with that, and Justin is going to help you with that. He's going to share some great ways to stay on top of your credit score and keep it there. There are some simple things you can do. It's going to save you thousands of dollars. We're going to show you about that. We're going to tell you how Justin and why Justin can help you better than any other credit company that we've ever worked with and any other credit expert that any of our clients have ever worked with. And we're going to tell you how you can do some stuff on your own to improve that credit score next.
This program is brought to you by the Real Estate Radio Network. Visit realestateradio.us for more info. That's realestateradio.us.
Having insurance and having the right amount of coverage are not necessarily the same thing. For example, water damage happens in a variety of ways and is one of the top reasons people file property claims in Texas. But did you know that some well-known companies will not even cover you if a drain backs up and overflows into the house? Just because you have a policy does not guarantee that you are truly protected. Be safe, check with your agent. If you'd like some help, call me. I'm John Allen with Texas Community Insurance, and you can reach me at 214-736-9696. Once again, that's John Allen at 214-736-9696.
Everyone is busy, not to mention the headache that comes with moving. And that's why Utility Concierge is here, to make the moving process easier, faster, and simpler. Utility Concierge will connect you with all the available options from basic utilities to cable, phone, internet, home security, and everything in between. Don't waste hours on the phone talking to service providers when you can make one call to Utility Concierge, the one-stop shop for your move and your home needs. You make the selections, they make the connections. Call 214-736-9696, 214-736-9696 to get connected today.
As a business owner, are you getting all the tax advantages that are available to you? Are your assets protected from creditors as much as possible? What are you doing to save and invest your hard-earned income on a tax-favored basis? And finally, are you aware that you can legally discriminate in favor of yourself and other key employees with certain planning techniques? Hi, I'm Randy Nichols, partner at Spectrum Financial Group in Addison, Texas. If you answered no or you're unaware of the answer to any of these questions, call me at 214-736-9696. I can provide you with the answer to these and other important questions to help you improve your personal financial situation and take advantage of all the benefits that are available to you. Call me, Randy Nichols, at 214-736-9696. That's 214-736-9696. That's 214-736-9696.
Why do people prefer to do business with Fidelity National Title? Some people say for the high-level security we offer through our solid financial strength. Some say they trust our history of excellent service. But most say it's our passion for excellence that keeps our customers coming back. Put your trust in a company that stands the test of time and will be here tomorrow. To learn more about Fidelity National Title, visit fidelitydfw.com or call 877-862-9111.
Welcome back, Dallas. You are listening to Tuttle Talk here on the Real Estate Radio Network. I am your host, Andy Tuttle. You can listen to us on your iHeartRadio app. You actually get a ton of great shows there, and this is one of them. And you can reach us on our off-air number. We're never going to surprise you with being on air, but we definitely want to help, so you can call us at 214-736-9696, 214-736-9696, and you can catch all shows, including this one, in their entirety at andytuttle.com. My special guest today, Justin Nichols of the Nichols Law Firm, PLLC. Among many other talents that he has in business and personal life, he is a credit expert. And he has spent the last several years, Justin's like, I have no other talents. But it's not true. In fact, he was written up and published in the Texas Journal of Consumer and Commercial Law. So he knows what he's doing. We have worked with so many credit restoration companies over the years. It's horrible how the bad results we've gotten in our best effort to try to help our clients and ourselves and our friends and family. And it's just, the results have been abysmal. It's touch and go. It's basically a crapshoot. Until we actually met Justin, and my business partner, Jason Wetterauer, actually is the guy that got him into the business, but I'll let him tell you about that. It's an interesting story. But Justin has been able to help so many of our clients, dozens and dozens and dozens, I think, even in the last 6 months. And it's been such a huge blessing for us. So, Justin, I'm so happy to have you on the show today.
Glad to be here, Andy.
Good. You like that intro?
I did. It was very flattering.
Yeah, so going on and on and on. And you're like, oh, my goodness gracious.
I'm red. But feel free to go on.
Yes, please.
If you'd like.
Yeah, he keeps saying stop, but he keeps waving me forward with his hands. It's kind of weird. So I do want to talk about, how you got into this business.
Well, I tell you, I grew up in North Texas, and in 2006 I had to go to the hospital for something and had a little surgery, and I woke up in the recovery room and had a sticky note taped to my chest, and it said, "It was worse than we thought. I'll write you an extra prescription." And that was all I had. And I asked one of the nurses if she could help tell me what it meant, but the nurse didn't speak English, and so she spent an extra hour trying to find somebody who could translate the note for her and tell me what it meant and what I was supposed to do. And a few months later, when the bill came, they charged me for that extra hour in the recovery room about $2,000. And I called up and said, you know what, I'm just not paying it. They said, yes, you are. I said, no, I'm not. And they referred it to a debt collector who put a collection trade line on my credit report. And that's when I decided, you know what, enough is enough. So I decided to go down to the Justice of the Peace's office and file a little lawsuit, and I took care of it. And I figured out, that was the first time that I can remember, that it was possible to fight back against some of the debt collection practices and damage that's done to credit reports. So I got good at it for myself. I got good at it for my friends. And I ended up in Sherman one night at a bar, and there was a friend of a friend who had a credit restoration company, and he said, you know what, we have a guy who sends us a lot of business, and he's hired us to help him personally, and we haven't been able to do it. And if we can't, we're going to lose his business altogether. I hear you are good at writing some nasty letters. Do you mind helping us out?
Fiery.
Yeah, so I agreed. And I don't remember exactly how it happened, but the client found out that I was involved and said, hey, let's cut out the middleman, and asked, are you interested in getting some of my referrals? And I said, sure, why not? And that's how it all got started. It kind of fell in my lap by surprise.
And that was Jason Wetterauer, right?
It was. Jason Wetterauer started it all.
That's hilarious. I love that. Well, thank you, Jason, because my goodness gracious, Justin, those nasty letters did a good job.
Well, nasty letters only take you so far.
That's true, and I do want to get into that because now you did something to help you really make a difference. But you mentioned Texan. You've been in Texas a long time. Your family has, right?
I am. I'm a proud sixth-generation Texan.
Wow, man, that's really strong. Now you still. Did you ever move away from Texas?
I've never lived outside of Texas.
That's a good man. So that's generations. That's what, the last couple of 100 years or last 150?
About 150.
Yeah. That's strong. That's good. A good heritage here in Texas. Now, when you decided to, you were doing nasty letters. It was working okay, but I guess it wasn't working good enough. So is that why you decided to become an attorney?
Well, I had always wanted to be an attorney, but I didn't know what area of the law I wanted to specialize in. And during law school, I started a credit restoration company. It was with two partners. It was called Schlicker, Nichols, and Ritzwaller. And that rolls off the tongue. But
The more you drink, the more it rolls off your
That's
tongue.
right.
it does. It does.
Well,
It does. We called it SNR for short. But I started doing it and realized a lot of the confines and limits that credit restoration companies face because they're not attorneys. They can only do so much. So when I became an attorney, even though I had become successful at achieving results for my clients, when I became an attorney and was able to enter into an attorney-client relationship with these consumers, it really took off, and the things that I was able to do for them really changed in a miraculous way.
That's yeah, because now instead of just being kind of a nuisance, which apparently you're very good at.
Thank you.
I hear in more ways than one. I'm kidding.
Well, my family would agree with you, I'm sure.
So you did that, and now that you are an attorney, you can, more than just write those nasty letters, you can kind of call their bluff, right?
Yeah, I mean, at the end of the day, a credit restoration company, all they can do is send out letters or make phone calls and say nasty things or threaten something. But at the end of the day, they can't really do anything if the debt collector or creditor says, no, we're not going to deal with you. And there's really no grand remedy for that. But attorneys can. They can call the bluff and take a whole bunch of different avenues that achieve the client's objectives and goals and pursue the client's rights, frankly. That can mean anything from filing a lawsuit to accepting the consumer's power of attorney to truly act as their agent, whether the creditor or debt collector likes it or not. So there's a whole bunch of mechanisms that attorneys have that credit restoration companies don't have. But with those luxuries also come some burdens and restrictions.
So, okay, I want to get into those restrictions, but first, make sure I'm clear on this and that the listener's clear here. You basically are saying that debt collectors, and we know this, debt collectors and collection agencies, they don't like credit repair companies. Clearly, they don't want to deal with you.
No, they oil and water.
Yeah. So they want to, and there's a lot of things they can do now to dissuade the normal credit restoration company, right? They can just basically put up some brick walls around those services, right? So that they can basically not let that credit restoration company in. Is that right?
Sure. Some credit bureaus refuse to even acknowledge them.
Really?
I believe Experian won't even communicate with them.
So really, some people, and they have to know that. So some credit restoration companies are collecting money, and I know there's some laws against how we get, or how you have to structure that. Basically, signing up clients and then not being able to help them, at least on Experian. I mean, they're just not even going to be able to do anything.
Well, and that a good credit restoration company can achieve some limited results, but the
Right.
important thing to remember is those results at their best day can only go so far, and that's where attorneys can take that extra step.
Gotcha. So, and when you said, so let's see here, because yeah, they have to take you seriously, because you can, like you say, call their bluff. You can file a lawsuit. You can, I guess, take them to court at the end of the day.
At the end of the day.
So, what is the difference then, and how does this benefit the client more so? I mean, I can see obviously there's some obvious answers there, because you can file a lawsuit. You can do more than a normal credit restoration company. So that's one way it benefits the client more. How else? Because I know there's a lot of stories of bad credit repair guys out there, and man, goodness gracious, it's like you feel like there should be some more guidelines or regulations on that, but there's a challenge there, right? And then there's a difference when you work with an attorney that a client can have more confidence in.
Sure, and the reality is there are some laws on the books that regulate, both federal and state law, that regulate how credit repair companies conduct their business or credit service organizations conduct their business and interact with consumers. But when it comes down to it, there's no governing body that's actively watching individual credit repair companies or restoration companies, accepting complaints and investigating them individually. Attorneys are different. We have something called the State Bar of Texas, who has a chief disciplinary counsel with millions of dollars and a budget to investigate attorneys who do not adhere to their duty to their clients. So when I take on a client who has a goal or objective regarding their credit, I inherit a fiduciary duty in that attorney-client relationship to do my best to respond promptly, to keep them informed, not to take their money without performing services for a reasonable fee. And if I don't do those things, if any attorney doesn't do those things, you can complain to the State Bar of Texas, and I guarantee you they follow up on those complaints every time individually. And if you've done something wrong, they're going to get you for it. And so along with the luxury of being an attorney, getting to go all the way, if you will, on behalf of one of your clients, you also have the burden to to carry out your duty to your client to the fullest extent that the rules of professional conduct require.
You're listening to Tuttle Talk on the Real Estate Radio Network. My special guest is Justin Nichols, the owner of the Nichols Law Firm, PLLC, and we're talking about very relevant topic of your credit and really what the main challenge right now in the market is between normal credit restoration companies and having a credit restoration company that is an attorney. So I want you to get this, guys, because the deal is if you've gone through this before and you didn't get results, that may be a very good reason why that happened. So the biggest fear for people not taking action on either looking to buy a new home or getting any kind of credit, but mainly with getting into a new home or looking into restructure your current financing, is fear that you're not going to qualify because of all the restrictions. This is a fantastic way to find out if there are some things you can do to improve that score. Justin gets fantastic results, and it's to look into it and to find out if you can help them is free, right?
Sure, yeah. There's no cost to have us review your credit report or visit with you, consult with you, and see if there's something we can do to help. And if there's not, I'll be up front and tell you. That's
right, and you do that all the time, actually. There's some of the, hey, man, you're not here. Because actually, we don't just send and guys, this isn't for you if you just have horrible credit. Sometimes, and actually, it's always a good idea, even if you have a 680 score, a 700 score, to look at improving your credit to get an extra 20 points. Could be an extra eighth of a difference in rate on your mortgage, right? Or it could help you get into that credit card at 0% interest as opposed to 7%. There's a lot of opportunities there. So if you want to talk with Justin, reach out to me. Email me at questions@andytuttle.com, questions@andytuttle.com, or call us 214-736-9696, 214-736-9696, and we will get Justin, guys, free call, free consultation, find out if you can improve your credit. And honestly, it's very inexpensive anyway. And Justin, I don't know if you want to go about this on air. I kind of surprised you with this, but aren't there some regulations that protect, and I'm not sure how this works, but basically, I know you get paid up front, but you can't get, it's not like you're collecting thousands of dollars or anything on this deal up front to improve take one thing off their credit report, right? It doesn't work like that. Aren't there some protections for the consumer as far as how you get paid and everything?
Well, there's two things. In reality, there's things that are written down, and then there's things that are done in practice. And unfortunately, some of the distrust in the industry of credit restoration is because people and companies don't follow what has been written down. But the way the statutes and the laws read is you pay for services once you've received them. And that's what we do. Is it's kind of, I say pay as you go, but once results are achieved, then there's a bill, but not before.
That is huge. It's huge because so many take monthly, big upfront, and then all this monthly stuff, monthly income residuals for them, but sometimes they don't get results. And you can, like you say, if you're don't have an attorney there, then you just got to kind of hope they do a good job because there's not the regulating bodies, right? But what I love about this, guys, and you need to hear this too, is you're gonna get results. If you don't get results, then it's like he says, it's pay as you go. You get results and then you get a bill, correct?
Yeah, and another difference between credit service organizations or credit restoration companies and attorneys is the law limits the length of time you can hire one of those companies to 6 months. And so when you buy a membership, you're buying basically a block of 6 months of membership. I don't know what membership you're getting from your membership, but in my mind, when I'm working for someone, the way I get paid is achieving results. It seems to me that it would behoove someone financially to keep you on the books as a member for 6 months instead of 1, because if the way they get paid is time elapsing, that doesn't seem to me to be in the consumer's best interest.
Betty, I totally agree with that. And I know some of you have been burned because they do that monthly deal. Justin does not. This is exactly, it's what I hate about sometimes, like when I hire a plumber or a mechanic and the hourly rate, I'm like, geez, well, the longer you stretch this out, the more you get paid. But this is, hey, man, you got to get results. So it's a whole different ball game. And that's why I'm so proud to have you as an expert contributor on this show and helping so many, literally over the years, hundreds of clients. I mean, we've just, you know what I mean? It's great. So I really appreciate that. I do want to get into this real quick before we go to break. I want to demystify the credit report, and then we'll get back into show you how you can do some things on your own to improve your score. So you got to know where you are, though, first to know how to get to where you want to go, right? What's the first thing you do when you arrive in a city and you don't know where you are and you call your friend, right? And you're like, I don't know how to get to where you are. What is the first question, John, that they ask you?
Where are you now?
Exactly. Where are you? Oh, I'm here at the airport. Oh, okay, great. Well, then you do this. Now we have GPS, right? And what is the first thing that shows up on your deal? Where you're at. Boom, you are here. And then now you got to know how to get, then you can figure out how you get to where you want to go. So you got to know both things. So let's talk about where you are now. These are the 5 factors that determine your credit. Justin, what are those?
Well, and we don't know specifically what the algorithm or calculation method is for use to calculate your exact score, but here is what we do know. The top 5 things that affect your credit score, from most important to least important, all of them being pretty important, are first, payment history. Are you paying your bills on time and as owed, as they come due? Secondly is your amounts owed. Sometimes we call this debt to credit ratio. If you have a $10,000 credit card, are you carrying a $9,000 balance? That's a credit risk, so it's better to keep those ratios low. Third is the age of credit history. Someone who's maintained 3 credit cards for 30 years is a lower credit risk than someone who has 2 credit cards for 3 months, just because the creditors can look and see how you've behaved over the course of a longer period of time. 4 is new credit inquiries. Credit inquiries, there's 2 types. We call them hard inquiries and soft inquiries. Soft inquiries are when you look at your own credit, when insurance companies look at your credit to determine risk, employers. Those are all kind of soft inquiries. But hard inquiries is when you're trying to obtain money or borrow money, typically. And those are when you have a number of them on your credit report. That indicates to other potential creditors or lenders that you've been pounding the pavement, going around asking for a lot of money from a variety of sources, and that increases your risk. And then finally is the types of credit. Someone who's only had credit cards their whole life may not know how to handle a mortgage payment, or may not know how to handle a car payment and a mortgage payment. So when someone has diverse types of credit, that improves someone's credit score over someone who just has a limited number of types of credit. So those are the 5 things: payment history, amounts owed, age of the credit account, new credit inquiries, and types of credit.
Okay, so let's drill down into each one of those sections. This is what I want to do. So we're going to lay the foundation here of how you should look at your credit, how your credit is viewed by lenders, so that you know how to maximize on the opportunities out there. So number 1, payment history. So a lot of people go, man, if I'm 1 day late, now you always pay your bills on time, but just want you to know how this is calculated. On your credit report for things like credit cards, car loans, mortgage payment history, those do not report to the credit report unless they are 30 days or more late. True or untrue, Justin?
True.
Okay. I should have done this in a true, I should have done this. True or false? So I'll do that next time. So that is one. So in other words, if something happens and you're a day or 2 late, you don't have to panic. Obviously, you want to pay those on time. You want to get in, if you're living hand to mouth like that, there are other challenges that you're facing, and we need to help you with those as well. But you don't have to panic and go, oh, I can't apply for a loan. I've been late on all my stuff. Well, if you're 2 days late, you're not late. That's not popping up every time. It's 30 days, 60 days, and then 90 days late. And each one of those has a varying degree of influence on how it impacts your score, right? So in other words, Justin, is it true that if you have a rolling 30-day late, so in other words, you're 30 days late on a bill 6 months in a row, but you always only keep it 30 days late, that can be less hurtful than going 90 days late one time.
Typically, that's right. And I'll caveat that with saying, a lot of times being 1 or 2 days late can trigger a late fee, which if you don't pay the minimum payment or the payment due and the late fee by the 30th day, then you get dinged. So what a lot of people will say is, oh, I was a week late, I'm safe credit-wise. Well, you need to make sure that if there's a late fee and you can't get that waived by calling the creditor, you need to pay that as well, because if those 30 days elapse, it's likely going to ding your credit.
That's a very good point. Okay, second, amounts owed. So I get a lot of confusion on that. People always like to call it they always say debt to income ratio, but they mean debt, like you say, debt to limit or debt to credit ratio. So there's a couple ways that's calculated. One, let's use the example that you use. You have a $10,000 limit on a credit card. If you are obviously maxed out, your score is going to be killed. Now, Justin, it's been my understanding, and you can correct me here, that there are a few different levels of how your score gets affected based on your debt to limit ratio on your credit cards. And we're just going to take the one credit card scenario now. So if you have a $10,000 limit and then you borrow, let's say you have $9,000 in debt, if you pay that down to under $9,000, in other words, under 90%, it actually affects how the algorithm calculates your score, and you are not as negatively impacted. You're still negatively impacted.
Yeah, 90 is high, but the lower the ratio, the better for you.
Right. So it goes 90, then 70% is another level, and then 50%, and then 30%. So the lower you get to those levels and pay down to those levels, because maybe you can't pay off your card fully, when you get to those little markers, your credit, you could say, slightly improves, or if you look at it the other way, it won't be dinged as much. Fair statement, Justin?
That's fair.
Okay. So we don't have time right now, but I want to get into, and we'll go into another conversation about how the two scores work with one credit card, your debt to limit ratio on one line of credit, and then your cumulative debt to limit ratio. So if you have multiple cards, one maxed out and the other has no balance on it, it may behoove you to move some of that balance, correct?
Sure. And one of the challenges, just really fast, is a lot of times in the last few years, people have seen their credit limits reduced. So you'll see at one time in 2004, they had a $10,000 credit limit and carried an $8,000 balance. Then all of a sudden, the economic crisis hit and their bank lowered their credit limit to $5,000. Well, all of a sudden on their credit report, it looks like their high balance was $8,000 and their credit limit's only $5,000. And that's artificially lowering the score. And so a lot of times we have to work pretty diligently with some of the creditors to correct that so it's not inappropriately damaging someone's credit score. That's another consideration to take into the amounts owed category.
Very important. You are listening to Tuttle Talk here on the Real Estate Radio Network. My special guest today is Justin Nichols. Coming up, we're going to dig into the other three areas, the three factors that determine your credit, and we're going to show you how you can use this knowledge to help improve your credit score on your own next.
This program is brought to you by the Real Estate Radio Network. Visit realestateradio.us for more info. That's realestateradio.us.
You'd get upset when your insurance company doesn't pay your claim. More often than not, the reason is because you didn't buy the coverage that you thought you had. Just because you have a policy does not mean that you have coverage for all of the things that may happen to your house or your car. Your education about proper insurance coverage does not have to be long and drawn out. Want some help? Call me. I'm John Allen with Texas Community Insurance, and you can reach me at 214-736-9696. Once again, that's John Allen at 214-736-9696.
Real Estate Radio's Tuttle Talk in Dallas is hosted by local real estate and finance expert Andy Tuttle. The purpose of the show is to help consumers understand what's really going on in our local real estate market. We're teaching you the why and the how-to, so you'll always be one step ahead of everyone else. Whether you need to sell your home for top dollar, refinance and save money, or even buy a bargain in DFW, Andy Tuttle can help. Call Andy directly at 214-736-9696. That's 214-736-9696. Take advantage of speaking with Andy anytime you're entering a real estate transaction. Having someone who can answer all your questions that truly cares about you and your family's best interest is priceless. Call Andy today and you'll be glad you did. 214-736-9696. That's 214-736-9696. Or you can visit andytuttle.com for more info.
Do you have an insurance strategy? When is the last time you had a policy checkup? Do these sound like odd questions to you? Well, they might if you are used to hearing insurance agents talk only about all the money they can save you on your insurance. Saving money is important, but with insurance, saving money on premium may cost you big dollars on claims. Why? Because not all policies are created equally. So, if you come across someone who does not have a clear insurance strategy, or you yourself don't, they probably need an insurance review or a policy checkup. And John Allen with Texas Community Insurance can help. He is trusted in the industry, and he has helped me and many of my clients over the years save tons of money and get properly insured. Call 214-736-9696. That's 214-736-9696, and we will personally introduce you to John Allen to get that review, get that checkup, and take care of your needs. You can also reach out on Facebook.com/Tuttle Talk. And we're back! Welcome back, Dallas. I do it every week. I know you know. I can just imagine some of you turning down your radio every time we get into this part of the segment. So, this is Tuttle Talk. that you are listening to here in the great state of Texas. I am your host, Andy Tuttle. My special guest today is Justin Nichols. He is the owner of the Nichols Law Firm, PLLC, and he is a credit expert. And he's working with us today, and we are talking about the 5 major factors that determine your credit and going into those and digging down. The 5 ones are payment history, amounts owed, the age of your credit history or credit accounts, the new credit inquiries, right? And we talked about the difference, and we'll dig in more about hard versus soft inquiries, and then the types of credit you have. So, Justin, let's get into more of the age of the credit history.
Sure. Well, typically your credit report gives a snapshot of the last 7 years of monthly payments, but there's also spots in your credit report that will indicate when an account was opened. So the overall age of each one of your accounts is important. So somebody who has serviced their mortgage every month on time for 20 years versus somebody who's a first-time home buyer may not be approved for a loan trying to buy an investment property. Likewise for credit cards and other similar forms of financing and loans and credit. But the age of your credit history, how long you have had each account, and also have you taken on a lot of different accounts in the last year? You know, that gives the idea to a potential lender or creditor that we want to take a wait and see approach. That, you know, you've gotten some credit over the last year. We want to wait and see how you handle it, and maybe a year or two down the line, you're going to be a great or a very low credit risk. So age of how long accounts have been open is important.
So a couple of things on that you get is, one, you know, don't be super upset. You're 20 years old, 24 years old, and, you know, you don't have a 780 credit score, but you paid everything on time. It's just because you haven't had credit for long enough. You haven't been in the system long enough to prove that you're going to have perfect credit, because I see that a lot. People are like, man, I've never paid late, never done this, but you just have only a couple of trade lines or like a credit card or a car note or a mortgage. Those kinds of things are called trade lines. And so, or your Victoria's Secret card like my wife has, right? Which is, by the way, the worst type of credit you can have. And we'll talk about the first type of credit card, right? So we'll talk about that in a minute. But is the other thing to factor in too is, or I should say maybe on the other hand, when you're older, you may have several of those. You may have a lot more credit than that young 24-year-old, and you have that 800 score. And also, Justin, correct me here if I'm wrong, but if something happens to you where you maybe are a little higher in your debt to limit ratio on your credit cards, or maybe you ended up having a late payment a year ago one time, your credit is going to be affected less than the new 24-year-old that maxes out his credit card or has a late, correct?
Sure. And one of the other things on on that, when people are maxing out credit cards, that made me think of something. You know, a lot of times people will be attracted to credit cards who offer a 0% for transferred balances. So they'll say, well, I have this huge balance at 7% on one card or 10%, so I'm going to close that account and transfer it all to a new card as I just open it. Well, that sounds good as far as how much you're saving on your interest, but for the purposes of calculating the age of your credit card accounts, you just killed one account and gave birth to a new one. Right. So, those are not always closing and opening accounts is not good for the longevity of age of each one of your trade lines.
Very good point. So on that too is, because a lot of people do this, they pay off their credit card and then they close the account and then they wonder why their score drops. Right? And it's for that same reason, because now let's say you had a debt load of $5,000 and your total available credit was $10,000. Well, if you shut down a card that had a $5,000 limit on it and now you close it, now you have a debt load of $5,000 and a credit limit of $5,000, right?
That's right.
So it seems like you're maxed out, so that makes you a higher risk.
On paper it does, and that's one of the unfortunate challenges of credit reports.
So that's another tip. When you close out or when you pay off your credit cards, if you don't want to use them anymore, keep them open and put them in a shoebox somewhere, correct?
Sure. You may use them once a month, but keep a very small few dollar balance, but the key is to make sure that you're paying those off. A lot of cards sometimes will, but use them sparingly, we'll say that.
So is it a good idea to keep some activity on there, like to use it for gas or to use it for one little thing that you maybe have automated coming through Amazon?
It is. If for anything else, some credit cards after a period of inactivity will close the account.
Okay.
That varies creditor to creditor.
Okay, so it's a good idea. You know, we all have a lot of automated things that come to our houses, and we have subscriptions to everything these days. So maybe you keep a small subscription to keep it active and then pay it off every month. But keep it active, keep it zero, don't close it out. I know it's the game. You got to learn, don't hate the player, hate the game. So, and learn how to play it. So don't, these guys look at me like that was the dumbest thing I've ever heard. It's not.
No, it's not. But the way coming from you, it was particularly fun to hear.
Because I have a lot of street cred.
Yeah, very street cred. Very street cred.
Thank you.
I don't know.
You.
Lots
See,
of
Beth?
street cred.
See,
I don't
Beth?
even know what you have.
Sweetie, I got tons of street cred. See? Okay, so let's get into new credit inquiries, because we get this a lot. So here's the deal. One, John, when you pull credit report from insurance, it is called a soft pull, like Justin said, right? So when people are, and even credit card companies do what's called soft pull initially before they send you that you're pre-authorized to apply crud, right? And that's called a soft pull. It's when you engage with them and then actually fill out the application, and then it becomes a hard pull, correct?
Yeah, they'll re-pull it formally, and that's the hard pull if
And
they
that's-
actually apply.
Okay, so, and here's the difference, guys, because people always get concerned. They ask me the question, oh, I don't want you to pull my credit because then it's going to hurt my score. Well, what you don't understand is that when you pull your credit, if you go apply for 3 credit cards, the algorithm says, and it makes sense to think that each of those applications may result in a new credit card. So you may have 3 applications and have 3 new credit cards. Conversely, and the algorithm and the credit agencies know this, when you apply for a loan and maybe you have it, maybe you're shopping around for that loan and you do 3 different inquiries in a couple of weeks, that each new inquiry does not mean a new mortgage loan and therefore does not ding your credit the same way. Is that correct, Justin?
Yeah, it's hard to say exactly what the algorithm calculates each inquiry, but that tends to be true. That's a factor that the algorithm takes into account when calculating your scores.
And I believe it's getting a little more difficult now that some of these credit vendors, so just so you know, there's the 3 big credit agencies. You've got Experian, TransUnion, and Equifax. Those are the 3 big gorillas, I guess you'd say, even though, from my understanding, there's actually 27 credit agencies or something like that.
There's tons of them.
There's tons of them. But these are the 3 main ones. Then there's these credit vendors that companies like us use and car companies use all over the nation and the world that use vendors like Kroll Factual Data or Credco and others to basically the intermediary between us and the credit agencies to review that credit. But now those companies aren't just pulling from mortgage companies, they're pulling from car companies and these other types of vendors, and it's making it harder to get that calculation right.
Sure. There's no indication very frequently on those. If Kroll Factual Data pulls it, whether it was for a mortgage, whether it was for employment screening or tenant screening or for insurance, it's getting harder to tell the difference. And so I always tell people, apply for credit formally as few times and as rarely as possible. Make sure you're in a position to be approved when you walk in and apply for credit, and that's the best thing to do. So you only have to ask for it once.
And that's right. And a good way to do that is to go to, I think it's just annualcreditreport.com or freeannualcreditreport.com, and you can get a free copy of your credit report. And if you're nervous about it, honestly, you get with a guy like Justin. Just get with Justin. Don't think about it. Just do it. It's easy. And you can call us 214-736-9696. It is a free call. It is no pressure, and you do not pay until you get results. It's a no-brainer. So let's get into, and just remember when you are pulling inquiries, do it sparingly, just like he said, but know that mortgage, as of now, still does not affect you the same as a credit card, so you don't have to be as concerned. Still be smart about it, but you don't have to be like, oh my gosh, it's going to kill me. It's not. Number 5, types of credit, and then we're going to go and summarize these tips we've given. So go into types of credit in a little more detail.
Sure. Well, there's a bunch of different types of ways that banks and lenders can give you money. They can range from anything from a credit card to student loan debt to a mortgage to a second mortgage to a car or boat. There's a bunch of retail credit cards versus large bank credit cards. So when you go and get a Banana Republic credit card, that's different from getting an American Express.
Better or worse?
Definitely riskier, higher interest rates, more opportunity to fail. I discourage people from getting retail credit cards.
But they do it so often because you get all these discounts, right? And so that becomes, then you have 5 or 6 of these retail credit cards.
Well, and I tell people, you know what, the 5% discount you're getting on the sweater, you will lose far more money on the 27% interest rate you're paying, and then of course far more in lost savings and lost credit once you miss one payment, and now you have a much lower credit score because you didn't pay on time for your sweater. But by God, you got $5 off at the register. It's just not worth it.
100% agree. It's better to get the big bank credit cards and get the points. Make sure you got one of those that gives you points and discounts and those kind of things. You'll far make up for it. Do not take any more retail cards. And if you wonder why your credit's getting dragged down, that's one of the reasons.
Absolutely. When they say at the register, do you want to save 10% today? Say no.
You're listening to Tuttle Talk on the Real Estate Radio Network. My special guest, Justin Nichols of the Nichols Law Firm, PLLC, talking about all things credit. I've been taking a lot of notes. So here's what I want to do in the last minute we have here with you is to summarize some of the key tips that our listeners can take away that they can do on their own to improve their credit.
Sure. The first thing and the biggest thing is stay on top of it and get started early. You mentioned freecreditreport.com or annualcreditreport.com. It doesn't matter. Here's a tip. Some of those require that you give a credit card for a membership. Give them your credit card. It's worth it. And then call to cancel and they'll cut the rate in half. So for $5 a month, you can have your own credit monitoring service. It's worth it. And that is the biggest thing that people can do on their own is access their credit report, know what's on it, stay on top of it, and then when they have a financial goal, start planning with a realistic time frame in mind. So frequently you get people and say, I need my credit repair or I need credit restoration and I'm closing on my house in a week. That's not going to be successful. The biggest thing people can do on their own is know what's in their credit report and be proactive instead of reactive.
That's a great tip. The other things you can do, and we're going to talk about this more in coming weeks, we're going to drill down into different things you can do, but that's the biggest takeaway today. Justin, thank you so much for being with us, man.
Glad to be here. Thanks for having me.
You bet. I'll be having you back every week as long as you're available.
I'll be here as long as you'll have me.
Yes, I will. All right, perfect. Thank you guys for tuning into this hour of Tuttle Talk. I hope you have enjoyed it. I hope you took some good notes. Remember, if you have questions for Justin or you just need to find out where you stand on your credit, it's a free call. And if you want to improve it and there are opportunities for you, you pay when you get results. How easy is that? Call us 214-736-9696 or email me at questions@andytuttle.com. Don't forget, get your boots on. Hey, that is just happened yesterday on Friday. We wore our boots. We took pictures. I hope you posted them. If you didn't, go to bootcampaign.com. Supports all kinds of great military charities. Post them when you get them this time. We want to get 100 boots on people this year and support our troops. I'd like to thank John Allen, all of our expert contributors, and my special guest, Justin Nichols, today. And I want to remind you that if you want to look at restructuring your financing or you're looking to get into a new home, go to yourmortgagereview.com. Yourmortgagereview.com will give you a free total cost analysis. We'll give you a free copy of your credit report, and we'll have a mortgage coach call you to talk to you about your options and the time frame and how to get you in that home the right way. I'd also like to thank our production director, Danny Miles, here every week, putting up with me. I love it. And the entire family here at KFXR. That's it for today. Race Talk is coming up next. This is Andy Tuttle for the Real Estate Radio Network. Tune back here next Saturday. We're going to talk about medical collections and other ways you can improve your credit. Thank you for listening to Tuttle Talk, where we're making financial intelligence a priority in the community. Have a great day.